I don't think we necessarily blow through all-time highs, but looking at futures at 0.72, we are likely going to see, I'll get the screenshot up in just a moment here. We're likely going to see a run into that positive gamma. So give me the screen. Here we go. All right, chat's up for everybody. Good morning, everybody. Morning, John. Good morning, Andy. Edward in the house. Dapper's here. Cindy. Cindy wanted some more music. Greg, good morning. Don, good morning. Dave, what's happening? Sam, good morning. Okay, screen share's up. Here is futures. So this was the sell-off just before the close yesterday. Pretty aggressive 15-minute candle. Futures spent all night pushing it up. This is where the inefficiency started from last week, Friday. So I mean, it appears that the market is just trying to chew into this uncertainty or this inefficiency rather, and we will see if there's more. I mean, the one thing I am cautious of is like this upside risk persists, especially, I mean, yesterday we went from retesting lows. This is a Friday low in futures, big gap up, flush down. You know, this was a retest in the markets. S&P and SPY opened up at the Friday lows and ripped like crazy yesterday. Just a lot of swings and noisy stuff. So we will see if this actually acts as resistance and makes its way back down maybe to this positive negative gamma pivot point, or if it just gets through it and continues to go higher. So I'm going to trade small. I'm going to trade. I mean, part of me wants to just do this. Part of me wants to just stack up sell trades up here at the highs and think the market can't get there. But I don't think that's a good plan. You know, this market has surprised us, you know, over and over with like how long it can stay at these highs and how many stocks have to move to keep it at highs and how aggressive this you know, buyback is in zero DT. I do think right now what's going on with US and China, it's a lot of noise. I don't think that Trump is going to how do I put this? I think that Wall Street still has all the leverage. I think that Main Street is going to get left further and further behind. I don't think Trump wants to see Wall Street crumble. And if we do botch this trade deal or this unknown negotiation and this hardball antics with China, it's going to get a lot more volatile. And I think to the downside, if we have a double-digit correction, I think there's going to be like more backpedaling, you know. So unfortunately, I mean, I think China knows this. I think China knows that, hey, look, this is the same narrative we had back in March and April. And look what happened. Hardest pivot we've seen in administration in a long time. You know, super firm, super tariff oriented. These revenues are going to crush it. Well, we pivoted hard and we just let the market rip. Now we're talking about grow. Well, we need China to grow, you know. So that being said, I just think this crazy upside risk is real. I don't want to see this be it. I think it's ridiculous that we've gone this far. I mean, S&P now, if we go SP, I'll go back to SPX here and bring up a couple of the workspaces. We're now going to be like 113, 14, 15 bars before we hit the S&P 50-day moving average. So gamma indicator. And let's use this one here. All right. So there's your futures overnight. There we go. So here's our bar count since May. I mean, it's not the points necessarily. It was the points back here in July to August. This was a, you know, 270, 280 point push away. At this point, we were around 227 points. So it wasn't the point distance, but it was just the time. And right now we're above the 50-day here, 114 bars. So I want to say this is the second longest stretch away from the 50-day moving average all time. When I look back before, 102, 104, 112. Now we got 114. So it could be 115 after today's candle. All right. So highs at 67, 62. Looks like we're going to be opening up futures wise about 0.7 higher. So if we go 0.7 higher from yesterday's close, 0.7 puts us right around 66.90 or so. We could kind of positively flow into these highs again. I'm going to see where our all-time highs are at. Is the market capable of another, 1.8, 1.9? VIX is at 19.46. So is this a day where the VIX goes up, right? Are we going VIX up, down, Are we just to stay between like 19 and 22? Or if the VIX retreats, then there's more of that upside risk. Okay, so let's get our levels. I parked this at the close yesterday at 66.44. This should be my reference point. Yep, manual reference 66.44. That's the close yesterday. So even with a gap open this morning, are we going to look to reach? Let's go center price up around 1.3%. That's VIX at 19.46. So 19.46 divided by 16, about 1.2%. Okay, so we shouldn't be able to get to the VIX box high. Now, I do want to point out one thing. If we gap higher, and the VIX is at 1946, this should be a safe high in normal conditions, but we should also look at starting this out with our what was our VIX? 1.2 translates to like 1.21%, 1.2%. So there's two levels I want to watch. Wherever we open, let's say we open up 0.7 higher, it's going to be around 66.90 or so, 0.7 higher. Yeah, we're going to open up around 66.90. Okay. So if I start at 66.90 and go up 1.21%, could we potentially get to all-time highs? The answer is yes. Could we get back to this inefficiency? Yes. Like this market is gettable. Okay. I don't know if it's going to be the same type of aggressive rally like we saw yesterday. I was honestly the most surprised yesterday by the dump at the end of the day. I mean, that dump literally was what put things back into market maker territory, because we started here, left side of my box. You started here, you closed here. That was within the plus or minus of the day. Barely, but it was. And that was how they got there. Like just a crazy dump for 20 minutes. But futures market all night, spent the entire night going higher. So point is, upside risk is very real. If I'm looking at calling the top today, sure, I'd like to see us, stalling at the VIX box here based on the close from yesterday, but we are getting big gaps, 1.2% gap from Friday to Monday, 0.8% gap from Monday to Tuesday, 0.7% gap from yesterday to today. These are big gaps. This does throw things off. I've said this a lot in our daily profit play sessions in the master classes. Gaps can make things very difficult. You have to approach the day like, look, price is open, opening bell, closing bell. There should be a pattern. There should be a mathematical calculation based on where things could go, where the extremes are at. So as much as I want to say it shouldn't go any higher than this VIX box, that's based on the close, and all night it's been pushing higher. So if we open here, we've got to take this VIX box and consider the secondary level of the highs and lows. Okay. All right. So I think what I'm looking at today, look, we're in positive gamma territory. At the open, we'll be in positive gamma. Okay. If we open up around 66.90, there's clearly some resistance here between 67.05 and 67.10. Room to get up to 40. I don't want to not take a trade today, right? But I might have to settle for, I don't know. And maybe the reality is if I settle for 50 cents profit, 60, 70 cents profit. I go a little bit further out of the money. If I'm willing to take on that risk of, 430, 420, 440, take on some extra risk to hopefully have a higher probability win. Reverse, maybe, but on Wednesdays, again, like Mondays and Wednesdays are my favorite days for the standard. I mean, we had a big gap up here and the market didn't do anything on Monday. We had a crazy wild volatility today yesterday. I wouldn't be surprised if, maybe volatile day followed by calm. Volatile day followed by calm. So, I mean, a reverse iron counter yesterday, yes, would have worked. Would have worked pretty well, actually, because the time you would have closed that trade, had you put in the reverse iron condor in this dead zone here, it was up all day, and even until going into literally like after 3 p.m., most of your profit would have been realized. So if you held it all day, you still would have probably made that money, but that would have been a much riskier play in the afternoon just because it came back in within that market maker range. Okay. So just doing some prep. So what I'm going to do is this. Here is the daily profitability indicator based on the previous day's close. Like I said, we're opening up here. I just want to acknowledge the VIX box. And so what I'll do is I'll probably just put in a top. I'll put in a top. So if we open here, I'll go 1.2% and I'll put in that potential top. Look, we can still sell the deltas that we see in the option chain at the open. Okay. I just want to be thinking that if this is kind of chunk one with the resistance levels, what should be kind of mechanical resistance levels, two is going to be, well, if I'm going to fade a high, that's probably the high. Right. So anyway, look, it's just a day. So don't trade huge. Markets have been giving us huge gaps. That makes it very challenging to kind of know what's going to unfold today. All I can go with is if we gap higher and we're in positive gamma, that means there's sell puts and sell calls. It may not be an aggressive bullish move, but it's probably going to be somewhat consistent. Volatility is still somewhat elevated. So we'll see. Yeah, inverse iron condor is doable. It just depends on what the payout is. If I don't want to go like 30, 40 wide. I think that's ridiculous because you're essentially going the entire range of the day, right? Today is showing a plus minus 48, 23.6% implied volatility, 48%, 48-point move for today's expiration. There's no major news, right? There's no major news. We still don't have data. There's no inflation data. Today should have been a CPI combo. CPI today, PPI tomorrow. It's all tentative, probably not happening. Friday's, non-farm's been pushed back. So are we getting a non-farm anytime soon? I haven't heard anything about when the government's going to resume. Does everybody know? Will see. Hang on. All right. Timeline for government shutdown ending. Senate votes today. I don't know if that's like the 6th or 7th vote, possibly another stopgap that doesn't pass. You just got to wonder is like, do Democrats think that they've got the upper hand by letting this shutdown like pass? There's failing all these stopgap votes. I mean, no. Republicans like, yeah, do whatever you want. Delay. We don't care. We'll just fire more people. So October 1st, longest shutdowns about, let's see, longest shutdowns. I'm not sure what the longest are. I don't think we had anything over 30 days before. Several failed attempts. Senate vote on legislation to fund the government is scheduled for today around 5:30 p.m. Okay, that would have been yesterday, actually. So there should have been a 5:30 p.m. vote yesterday. Healthcare policy changes. Operating at existing funding levels through November 21st. 11th government shutdown since 1980. No end in sight in the current government shutdown that started October 1st. Hmm. Looking to see when the next votes are. It's sad when you have to turn to a betting market to get your odds. 32% believe Senate vote will pass by October 31st. 83% that it'll pass by November. I mean, by November 30th. You're kidding me? We'd have a 2 month shutdown. Happy Thanksgiving, everybody. The government shall shut down. There's no way, man. This is crazy. The last and longest government shutdown was in 2018-19 during the Trump first term. 35-day shutdown was caused by disputes over expanding barriers U.S. Mexico border. Prior to that was 21 days during Clinton. 16-day shutdown during Barack Obama's administration and the Affordable Care Act. So I guess there's still time. 14-day shutdown, child's play. So 35 is the record. We'll see. All right. So meanwhile, all that's going on. There's a data blackout. Markets are gapping like crazy, and we're just trying to follow a plan. Day-to-day trading can be very noisy, as we saw yesterday. Larry, I know you had a good story yesterday at the close. I mean, that was a big swing in P&L for you, so I'm happy you closed out with some profit. Yeah, I ended up having to kind of look. I didn't like taking the extra trade that I did up here. I didn't post it as an official group trade because it wasn't a good trade. I took the 70 by 80 bear call spread up here for $4.25, full, like knowing full well that there's no reason for that to be the top outside of what I calculated yesterday was at the open here. I went up exactly 1.34%, and that was the top. That's how I found the top yesterday. Okay. But it wasn't a good fill. In fact, the trade that I put on, so I put that trade on for 425. I had another trade in for $9 out of a 10 wide trade because I was like, this thing doesn't have to stop at 80, right? So I got lucky. I will fully admit that. I got lucky on the trade. That dump in the afternoon allowed me to grab some good profit out of that. We survived one of our daily profit plays, lost on the other, and that bear call spread helped me get positive on the day. Okay. So that's why I'm doing the same thing today. If we have a gap higher, let's move out our 1.21. Okay, 1.21. And if the market's going to melt up all day, that's essentially going to be our, probably safer top. But if we just start out slow and choppy, we had a volatile day yesterday. If we gap up again, maybe the market's going to kind of catch its breath for Wednesday. No major news on the calendar today. We had an interesting rally yesterday. This went from like 45% bullish to almost 65% bullish yesterday, and not led by Mag 7, by the way. Nvidia down 4+%. Amazon, Tesla down, Walmart up. I got my shares called away last week on Friday with Walmart. I didn't get a chance to roll it on Friday, but it was rolling for like 30, 40 cents. But I mean, it added up because I had like a couple thousand shares. But Oracle down, Broadcom down, Nvidia down, Amazon, Tesla, Google, Meta, like red or flat. So, but somehow we mustered a 65% advance yesterday. Financials were big. Financials were really big. Industrials were up, but broader markets seemed to step up. Let me look at market breadth for a moment. Okay, there's your jump in market breadth yesterday. So I'd warned that, watching the market sit at all-time highs without having breadth support it was a bit of a, fragile look to the market. And I think that's why we also had that aggressive dump off on Friday. I know the why was a Trump comment, but I think the market was primed for, some type of catalyst, and, it certainly got it. Okay. John says, love the drop, didn't feel good about the close, got out daily profit play at 2. Are you saying the dollar credit you got out of $2 debit? Totally fine. I do know that our first trade, I'm not sure what time it would have been, but the way the market dropped, there was a chance to get out of the first daily profit play for a very small loss. In fact, I was watching it live and it was like down to $1.50, down to $1.40, down to $1.45. I thought, well, let's see if we can get a break even. And I know it was close, but I think you could have taken a very small loss on that trade had but again, you had to be sitting there watching it and managing it, which I know is not easy for everybody. So I ended up taking, the full loss on the first trade for $1.40 was the credit, 360 was the loss, but then had 95 cents in the other trade and then 345 bucks in the other trade. Taste you showing 715 for a 5 wide deep in the money call spread. Where? At what level? I mean, deep in the money call spread, but where? I mean, I was in here when the market was at the highs. I can get rid of these lines now. When the market was at the highs, I was watching it fluctuate back and forth. I saw this area trading for as much as, $4 to $6. I mean, up here when it's up to 66.80, I'm sure you could have gotten a perfect little fill there for $7-8. But it was in here when I was like, contemplating the trade. I mean, I took the trade after 3 p.m. but I didn't love it. I took the trade knowing full well, like I said, that it could be going, higher, and I'm going to take on a freaking, $575 loss. So that was why I didn't post a trade officially as a group, because it's not a good trade. It's a defense trade that I'm comfortable with the risk, but it's not a good group trade because it was an all or nothing trade, and fortunately it was lucky enough to have the prices fall back. No, I didn't. That's why I said, Randy, I didn't post it because it's not a good trade. The only thing I had to go off of was we hit the 1.34 measured move. That was that VIX rule of 16 at the open. We hit it exactly right here. So I thought, if that market is going to respond to that level today, well, maybe that's my top. So I tossed it in. But it was not a good trade. Like, it totally could have went against us. And then what? Then you take my trade and you're like, what the hell is Chris doing? That's a stupid trade at the end of the day. Why are we forcing trades? That's why I didn't force it. All right. So we got a gap higher. We're at 66. We open up, like we said, around 66.90, 91. Okay. So I'm going to go up from the open today and go up that 1.21%. And that's right around 71. Okay. So I would say between the mechanics that we're going to see in our option chain right here and the 1.21% with the VIX, that should be realistically where we see some highs today. All right. So let's have a look. So I'm looking at levels. So we open up around the 50% ATR. Can I sell the 100? Okay, so here are my levels. We clearly have more gamma resistance to the upside than we do the downside. So if I'm selling above like 55, that would be good. Let's see what those look like. I mean, already it's like those deltas are so small. Crikey. 25 and 30. All right, we'll see if price. I'm gonna go like an 11, like 10, 10, 11 delta. I'll go 30, 35 here. Let's look at what we can get. So 30, 35 on the call side. So I can get about $1 on that trade. It's like the put side is so much further away. The pricing skew is ridiculous. You're like right up here, just above the expected move on the call side, and then the puts, you're getting like all this extra distance away from the expected move, which is just pricing skew. But How good is this trade? Hmm. So it's in the way. I mean, we could reject at the 50%, but if we move up to the 100, we want to see it like pause. We're just in the way on the call side. Um, Gosh, you kind of have to get a little bit more creative. I'm going to go 50. I don't really like this trade. 50-55 is 100% ATR. That's really, really low delta. It's not going to give us a lot of premium. Okay. But on the put side, 35 and 30 were in positive. It's like 70 cents credit. Is that a great trade? Not really. So put side would be 66.35. That's coming back to fill the gap. I don't like any of these trades. All right. Market, melt up. Let me see. I just want to see if I can get some levels. I don't think we're going to go too much higher than 67.71 today. Um, I'm looking at maybe trying to brave the like 50 to 70 zone and just do some bear call spreads. Bull puts, I'd want to be out of the way. I mean, even this gap seems gettable. Like if we gap up and we come back and fill the gap, those puts will get threatened right away. So I will just try to go with the devil that I know is the slow grind to the upside and having a pretty high probability of kind of calling today's top. So I think between 50 and 70, I'm going to stack up some trades. Okay. We're only looking at a plus minus 30 on the day. Standard daily profit play, 13 delta. See if I can get a buck. I don't mind taking a trade. 13 delta. I get $1 for this trade. Let's see if we can get it. $1 is a pretty good fill out of a 5 wide. Just going to let that hang out. So those are sitting around the 14 delta on the put side and the 11 delta on the call side. I'm not gonna take that thing less than $1. So I've got a pending order. I'll put this in for the chat and I'll get some bear call spread sprinkled in as well. So today's trade. 10:15 expiration. 67.30. Got filled for a buck on that trade. Dollar credit. Build. Looking for price to stay less than 6730 and greater than 6630. Profit, targeting a 75 cents debit or lower for profit. That's 25%. Okay. So sprinkling in a trade there. And then if we go up, I'm going to try to go based on the VIX. So I mean, 70 is like the VIX high. If I went 65 by 70, I know that's way up there, but 65 by 70, try to get $1 on that trade. It's going to be hard to hit the VIX today for there, but I'll do $1 on that trade. And I might do $1, then like $3 and see if I can defend that high. So 65 by 70, and then another one 65 by 70 for, let's say, $4. And then a 75 by 80 for $1. Okay. Trades are in. So the trade that's filled, 1, 2, 3, 4. Trades in. For a buck, I'll set the take profit at 70. Okay, looking at some waterfall trades. Pending orders, 0.08 debit when I've got a take profit target at 0.05, 0.15 debit target at 0.07. Waterfall from SPX, profitable. And again, there's like 10 to 15% or more buffer on each one of these trades. So I think we're going to be fine. Plus, these are out to the end of the year. So even if the market does dump, 5%, 10%, I think there's still going to be an eager buy the dip that we survive all these trades, some good profits. All right, so keep an eye on that. Yesterday, I also did some dollar cost averaging. I know I talked about it in a couple live sessions that I did. These trades don't offer options, but if you wanted to position for some more gold or silver, these are freaking running away. Here's CEF up to 40, but I'm looking at all the moving averages to get leveled into. So buying, 4 levels. There's no options on this. This is just a dollar. This is just a dollar allocation. So I did this yesterday. I posted this for Project Options Edge, CEF, PHYS. I looked at 4 levels, 4 buy levels for a 1K to 2K allocation. PHYS did also 4 levels, 4 buy levels for 1K to 2K allocation. So when I say 1 to 2K allocation, what that means is I'm putting $1,000 at each level. So I buy at 37, 35, 32, and 30 on CEF. $1,000 each on my cash accounts. $2,000 on my margin accounts. PHYS 30. I'll put the levels in here if you're interested. So it is 37, 35, 32, and 30. This one was 30, 28.50, 27, and 25.50. Those are buy levels. So I'm putting in cash accounts $1,000. So 1, 2, 3, 4,000 total. They're all pending orders. Not a single one's been filled yet. $2,000 on margin. $1,000, 30, 28.50, 27, and 25.50. So this is PHYS is gold and silver, or no, CEF is gold and silver, and PHYS is gold. So it's just a slightly cheaper way to trade it, but same type of performance that you've been getting from spot gold. GLD, XAU. I don't trade XAU as a US trader, but we're up to fresh highs again. Last 4 days, ripping higher on gold. We'll have a pullback. I'm exhausted saying it because nobody thinks the gold's going to pull back. People are just dumping into this like gold's going to 5,000. I mean, maybe it does. Maybe it goes to 5,000. Maybe it goes to 6,000. I doubt it. Right? The last thing I want to do is be stuck with, getting excited about buying gold right here and knowing that a 20% correction is coming. I don't know how, like same thing. I don't know how it's going to happen, but charts don't do this, right? Charts won't do this. They will go parabolic and they will look vertical. They'll look like no end in sight, and they will freaking crash. And then there will be a build out again. So it'll happen. It's just, I don't know what turns it. Maybe it's the dollar index. Maybe it's the bond market. Maybe something crazy happens. I have no idea. Dollar's turned a little bit recently. I still think there's room for the dollar to get a squeeze. We just don't really see a bunch of risk off follow through right now. Bonds are up. Interestingly enough, we're getting a bid on bonds. Bond futures trying to eke out some fresh highs. US 10-year trying to get back down to some lows. So make for a very different look. If we get down to the Liberation Day lows in the 10-year yield and the market's at all-time highs, it's a very different approach than when the market's literally dropping off a cliff and we're celebrating a sub 4 10-year when clearly that didn't last. So I don't know. I think 10 years probably sticky. I mean, if it goes down, great. It helps a lot. It helps the average mortgage rates will come down. The average borrowing rate will go down. Like this is why the Russell has reclaimed some of the. Look at the Russell. The little small caps that could. Russell's at all-time highs. Awesome. The Dow, not quite there. The Qs, not quite there. SPY, not quite. The Russell. Is it sustainable? Yeah, maybe. What's the IV on IWM? 20. It's actually less. Look at this. SPY, IV rank is 23.2. NASDAQ, 24.2. Dow, 18.1. But Russell, 21. So less implied volatility in the Russell, and we're hitting all-time highs. So I've got some shares. I keep rolling my shares of Russell. I've got some 1-1-1s and ratio spreads we've done for Project Options Edge. Here is IWM. So shares, I keep rolling my calls out in time and up in strike. My break evens now, let's see. Go to IWM ratio. Okay. So this should be a roll for 28 cents. So I'm going to roll this out. Okay, 191. New roll out to December 19 and up to 204 for 28 cents credit. So break even 191.02 minus 28 is 190. 190.74 and strikes are up to 204. So make 13.26 per 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So about $18,500 if I let it get called away, but I'll just keep looking to roll it. Best in speaking on China right now. I mean, I'm already in it, Pete. Here's all my Russell stuff. So I've got shares, covered calls, and ratio spreads. Lots of ratio spreads. Some of these aren't labeled, but 175 by 170s. Those are all ratio spreads, 187, 186. That is a, ratio spread, 187 and 6. Here's just one account. I have them all stacked up. So here's Russell. So ratio spread 175 by 170, 186 by 1 or 187 by 186. And then I have my shares plus the cover. So overall, there's a likely $200 of income, another $122 of income, and about $1,400 of income there. And again, just like with all the other indexes, I mean, we've had a bit more of a volatile pullback here, but that 50-day has been offering, this was a support level, support level, support level, support level. That's the 21 period. That's the 21. I mean, if we pull back in the S&P and the NASDAQ, if we pull back, we're going to pull back in the Russell as well. So I think it's still volatile. My goal is this: as long as my prices can stay above 200, I'm just going to continue to position for. If we go higher, excellent, great, awesome. I'm not chasing this. I was long the Russell here, targeting here. Mission accomplished. This little excess, this little surplus, I'm not trying to be greedy. That was a great run. this entire run from 170 to 240, I've been long. Okay. All right. So one more thing I want to check. 1.21. So I've got 67.70 and 50, 65, 64. I want to check one thing for today. Go back to SPX. I don't think this is going to be a reasonable credit, but I can certainly set the credit in case it gets filled. If I do a 70, so I'll do a 65 by 80. So that should be, that's 15 wide. And then I will start at 65 on the put side, 65, 65 here, and go 15 wide. Okay, so 15 wide, I want to get at least a third of this width. So if I'm going 15 wide times 3, I need $5 on this trade. If this trade will offer $5 credit, I'll take it. Okay, I'm going to put another pending order. I'm basing this on the VIX high that I'm measuring and the VIX low that I'm measuring. This will be a pending order. Pending order based on VIX box, SPX 10, 15 expiration, 67.65 call, 67.80 call, 65.65 put, and 65.50 put. $5 credit pending. Looking for 1/3 of the width on this trade. This also considers the close yesterday and the gap open today. Okay, so I'm going a little bit wider because if we go from the close yesterday and measure down 1.2%, we go to the gap open today and measure up 1.21%. We shouldn't see prices going, especially with this gap higher. The gap higher, we shouldn't come all the way back down to that VIX box, right? The gap higher, we shouldn't be able to go all the way up to that level. That's like should be my extremes in the day. So that's a wishful thinking trade, but obviously if I get filled for, $5, I think it's a pretty high probability $5. But it'll be pending. It may not get filled. If price just does this for our morning here for, the next whatever 30, 45, 60 minutes, then we'll just hit our standard daily profit play. Okay. Best speaking on China right now. Okay. Let's go to the heat map for this morning. 72% of stocks advancing. There's your bounce back in Mag 7. So leading the way, I'm sure a lot of that was, futures market flows in, big buys on Mag 7. Got some bright green across the board in tech. So it certainly looks a little bit healthier for today. Is it capable of getting us back to all-time highs? Maybe. The one thing that looked a little iffy this morning is look at how this got back to today's levels. Look at the 15-minute chart this morning. I know my charts are a little messy, but this was the sell-off. So here was yesterday's rally, right? We test the low, we rip at the open as we, dump initially, rip up 1.9%, and then we sell off in the end of the day. Look at when closing bell hit and the market just spent the entire night just grinding higher. So, that certainly looks like structure that if it breaks, we give it all back. but there's still some inefficiencies to target, which is just a little bit higher. So this is all the inefficiency from Friday. If the market's going to continue to kind of grind through it and find it, do we hit it, sell back off? Look, at the end of the week, I know this might seem just like a head spinning volatile week. We might not be breaking this high and we might not be breaking this low. This market might have a day that the whole week is just like inside gap volatility, prices all over the place, but it's not higher and it's not lower. Would anybody be surprised by that? As the dust settles and it's like just crazy gaps galore every single day, would anyone be surprised by that? I wouldn't be. It's just this is the one trade-off of trading short term. You see this noise every day. You deal with this noise every day. That's why when we take trades, we set them up where it's like we shouldn't have this trade be threatened. If the market did what it does most of the time, we shouldn't have this trade threatened. This should be a win. Sometimes the market doesn't always do that. So anyway, that's where we're at. Okay. So we are clinging to a positive candle for the week, but still not at highs, not at lows. I'll move this up here for fresh all-time highs. And look to see if we take out the lows, but it could be in between. Okay, so far our trade. I don't know how our trade is down. I honestly think this is the risk of the 5 wide. If you go 5 wide, you just need more time in the trade. It's like volatility is just so sensitive in a 0-day environment when you're only 1 strike apart. It just doesn't give you that like faster. You get slightly faster time decay in the 10 and 15 wide, but you're obviously taking on more risk. So I tend to care more about risk and let time do its thing. Market shouldn't be like blowing out the highs of the lows. But anyway, we'll see. We're pretty well centered. 30 and 30. Let me go to this chart here. So if we go 67, 30. and 66.30. There. So yeah, there was quite a bit of skew in the pricing this morning. So we took the trade right around center price. Calls are being threatened a little bit, not much. But obviously, if price is going to head up here again, then yeah, our call side might be threatened. That's also why I put in those pending orders. Speaking of, I do have some other pending orders. Doing a sell 67.65 call, 67.70 call, $1 credit pending, $4 credit pending. When I've typed in the chat, everyone that sees it in the Telegram alerts, let me know if this makes sense. 67.75, 67.80, $1 credit pending, $4 credit pending. Okay. Let me know if that makes sense. So I'm essentially doing one trade, 67.65 by 67.70 for $1, just one trade. But then I'm putting in same trade for $4 credit. Okay. So if I get $1 credit, $4 credits divided by 2, my break even is going to be $2.50 on the trade, which essentially makes it a 1-to-1. But that puts my break even at 67.50, which is confusing, but it's this number. If I get filled on both those trades, my break even would be 6,767.50. So as long as price is below that, we can keep the full profit, which would be enough for if we're below that, then we can keep our, at least some of our profit of the 250 that we can make net. Okay. Possibility of longer China tariff truce. I mean, I think Beston's just going to be asking for a de-escalation of this narrative. Tension. Yeah. We get it. New tail risk. Optimism over probable Fed interest rate decrease. What is the decrease? They're still cutting rates. What is everybody talking about? We're cutting rates. 97%. It's happening. December, 96%. It's happening. We're cutting rates. So this would be number 2, number 3, number 4, number 5. I guess possibly a number 6 now. So that's the shift. Market stoked about another 25 basis points out a year and a half from now. Cool. Anyway, it's noise. Look, how many of us want the market to fall apart? Nobody. How many of us would like to see some, normal technical behavior? Me. That's all I'm asking for. Just weird. It's just a oddly manipulated market that's just becoming more and more obvious. All I saw over the weekend, how many, just you talk about FOMO. It's like how many calls were bought here that got paid, how many puts were sold here that got paid, right? I'm sure there were calls that were bought. It's like, who knows, man? And I'm sure for every, one whale that gets lucky on that trade, there's tons of people that are the wrong side of it. But it's funny how that gets posted where you can just have that selective feed where it's like, who knows this stuff? But seems like there's some crazy manipulation when you look at unusual options when you dig a little bit deeper. Seems like the increased IB. I mean, possibly. I mean, the VIX went down a little bit, not by much, but a little bit. Here's the 10-minute chart on the VIX. So the VIX has gone down slightly. So I don't know, it's a gutsy play. If you want to get long today just based on the VIX dropping, I mean, I get it. But I wouldn't be holding that thing all day. If I was doing a bull put spread right now, let's just look at it. If I did a bull put spread based on a VIX that was dropping, if it stays that behavior for the day, if I did right below the open is 85. So that's right here at the expected move. So you look at like the 85 by 80, that's offering, 90 cents. I mean, there's Lance's program in a nutshell. You get your 10 o'clock move, VIX goes a certain direction, you go to your expected move and you put on a trade. Like 90 cents to $1 is a pretty good trade. You're just taking on $4 of risk. And if we fill a gap today, that trade's toast. So, I mean, what I try to do is stay out of the noise. Like directionally, sure, it makes sense. We're positive gamma, market drifts higher. But that if I took that trade right now, if I did 85 by 80, there's no way I'd be wanting to sit on that thing all day to close. If I had 90 cents and it paid me 60 cents, 70 cents profit, I would just take it. So just saying, partial profits. I mean, when you're 0DT trading, if you can get, on a trade like this one is directional, if you can get 50% consistently. So if I pulled in 90 cents on this trade and I close it out for a 45-cent debit, to me, that's a very good win if you want to keep a high probability. Yeah. So anyway, this again, I'm grasping here, but is this a elevated volatility phase that we're in? I mean, that was our big rip on Friday. Is volatility going to get crushed or is it just elevated? I could see market makers still, elevating volatility, keeping things high, and just keeping, like, today might be the day that the expected is greater than the actual, which is perfect. It's great for market makers. It's great for us. So if price is according to that, then our daily profit play should be no problem. But we will see what levels it respects. Okay. I need price to stay between 30 and 30, which where we opened was 40 plus points higher, right? Remember at the open, this was a plus or minus 30 on the day. Plus or minus 30 on the day. And we're almost 50 points above and 50 points below. And if price goes, we'll go ahead and threaten that trade. It's like, what do? You just hope market makers don't suck at their job. And they usually don't. But that's why it's just one trade. One trade that should win. But if it doesn't, we've got a backup plan. Okay. Hopefully the backup plan is going to, if we need it, hopefully we don't need it. So anyway, we'll watch. Yeah, I get it. I mean, that's smart. I would, like I said, if I saw the trade today, I wouldn't take it. Just knowing that, like, you're playing inside the volatility. I mean, all I see the market doing is not breaking highs this week, which means all we're doing really is attempting to eat into this inefficiency. And once the market is satisfied with that level, we probably sell back off. And I don't know if that's today or I don't know if that's by the end of the week, but it wouldn't surprise me if we sell back off. And all we are left with is a topsy-turvy week of there's a Friday, there's a Monday, Tuesday, and up to the highs and back. Who knows? But we might not break the highs or the lows, but we go literally a 3+% move down and a 3+% move up and a 3+% move down. That could all happen this week. So anyway, it's just a trade, but head on a swivel, man. A lot of volatility out there. And I say this, volatility in the short term. It's not that difficult to see this stuff, how it plays out in the bigger picture. This is noise, right? This is noise. So watch list Wednesday for my pinch point. Waterfall income. We are staying out of all of this noise. We're not in any of this crap. We took profit in our crash insurance for November. We got another one running to April. Project Options Edge. We sold premium while the VIX was high at 21.22. I did two income trades, one on SPY, one on QQQ. It's going to be like $250 by December. Little income trade, high probability. I literally went all the way down to April lows, and I'm getting $250 worth of credit. So yeah, I don't mind having a higher VIX. I can absorb all the noise because in the short term, day to day, it's like, yeah, it's a guess when the market cap's up, 1%, 0.8%, 0.7%. That throws things for a loop. It's hard to figure it out. Okay. All right. So speaking of, let me take a look at the old pinch point scanner for watch list Wednesday. And then we'll talk some waterfall. Deanna, can you type in Slack, how many students do we have pop in this week for waterfall? I've done a couple of sessions on it. Do we have 10, 15, 20 new students for waterfall? If we do, then I'd like to have a masterclass on waterfall. Otherwise, we did update the classroom, so I'll show you that as well. Give me 1 second. So let's go one-click trading. Let's go into waterfall income. I had this question pop up yesterday. Do we have any live sessions posted? And yes, we did a 2-day workshop last week on waterfall income. So here, waterfall income in the masterclass live sessions. Now we have more classes. There we go. So September 25th and October 6th, 9th, and 10th. So master classes. The 6th is actually a Monday live session. That was a live session for our typical trading session. And then the 9th and 10th was the 2-day workshop. So notice the timestamps here. The 13th, this was this week on Monday. That was a trading session. So I'm going to label this. So this is a Monday trading session. This is a strategy 1 workshop. Strategy 2 workshop. So those classes are now available. Arthur, we'll be getting more. I mean, it's all financials right now for this week. We'll be throwing out a lot more newsbreakers in the next couple of weeks. Earnings season is just kicking in again, so we had like a 3-4 week blackout on that one just because there's not much to trade. When there's no major earnings catalyst, we're not getting big movers and high implied volatility. I'm passing on earnings plays that just do the norm. Yep. But once we start getting some Mag 7 sprinkled in, we'll start getting some high flying volatility stocks, and we'll price them out. So we'll get some more. John says, can we plan something on pinch point scanner this week, preferably after 4? I mean, if I find trades, John, just look at the alerts. I've done pinch point classes the last couple of weeks, live trades. We've posted like 15 trades in the last couple of weeks. So I'm kind of good right now in pinch point. We got a lot of running positions. I'll take a look at the scanner to see where we're at. Waterfall income, Ken. Yeah, Ken's asking about what programs place the trades every Monday. Waterfall income. That's what I'm showing you right here. So trading session on the 13th. Masterclass workshop on the 9th and 10th. Trading session on the 6th. Masterclass workshop the 23rd and 25th. Masterclass workshop the 8th and 9th. Masterclass workshop 19th, 20th, 21st. All strategy 1, strategy 2 reviews. Okay. All right. So thank you for posting those, Deanna. And then going into pinch point. Go into pinch point. And just access the scanner. Let's see what's on here for the Go Zone. 29 stocks in the Go Zone. We have seen some of these, but I will have a look and price out some of these this week. Okay. Some of these we've already, like, I swear I recognize probably half of these. So we still have some stocks that are pinched, but we've taken quite a few. We've got some pending orders. We've got some trades that are filled. We've got NWS and MGM that are expiring this week. We took profit on MGM. That was a winner. We're going to see if NWS can get out of its. Well, I mean, it was close enough to the downside. Hopefully, we just have a little bit more downside to get us break even or better. We'll see. But we'll price out some more this week. Okay. All right. So like I mentioned, the class on Monday, SPX retesting. No, it's not. I mean, it's not even close to that yet. All-time highs are 67.70. So we've got highs here around 65 or 70. We're not there yet. Don't be saying all-time highs. We're still 30, 40 points away from them. Making a run to today's in between the 50 and 100% ATR. Okay, fine. We are going to see more volatility. Here's the VIX is retreating a little bit. But I'm telling you, like, this price action, don't be surprised if the market's trying to find this inefficiency, which it is eating into that inefficiency right now. Once it is there, it either uses it as resistance to sell back off, or it's trying to sweep the high as a fake out trade and sell back off. I wouldn't be surprised if this is all price manipulation at these highs to then sell back off. If we even get to the highs. If we don't get to the highs, again, this is where you fill in the gaps here in the futures market. Go to futures, look at how this price action is behaving. And look, it's bullish until that line breaks. You have inefficiencies back here. You've got all-time highs. But if this is price manipulation and it comes back down and it sweeps these lows, we're going lower. But there's your structure. So we're not there yet. All-time highs right in here. So technically there's our all-time high, but price inefficiency, I'm going to box this in. I'm going to see how price behaves with this area. Okay, because we are chewing into this pocket right now. That's a price inefficiency from Friday. Price is pulling back into it, but I'm curious what happens once we satisfy it. Does this price action actually matter? Right? And again, we're getting down to the smaller time frame here. It's just analyzing some noise in the bigger picture, but this is why I also like using something that's very forgiving. Waterfall income, we have anywhere between 10, 12, 15% room for error where we can still make income. Right now, that's my strategy 2. Strategy 1, it's been paying us since the bottom in April because the market just continues to go higher. But the last month or two, I've just been very cautious at these highs because I felt like the 50-day moving average, the technicals will have a flush, will have a correction, and a little pullback for 3%, last Friday is not, to me, count as the correction I was looking for. There's just little to no follow through still. So anyway, I'll come back and reference this ES stuff, but basically there's your high-low structure, and the market is dancing inside of it right now. The day is not done. Okay, here's what to expect on daily profit play. We started here. We went up a little bit higher. We come back to center. Guess what? We'll have a winner on daily profit play. Because it's just everything's sensitive, Gil, right? I mean, 0 DTE is super sensitive. You have 10 times the gamma risk in a 0-day trade than you do in a standard like 30, 60-day option. So everything is sensitive. If the market moves 1 point and you're at a 15 delta, like that 15 delta could become a 20 delta easily. It's just sensitive. And in a higher VIX environment, like 19, 20 VIX, same thing. You're just getting faster price movements. I mean, this jumped from 85. This thing's up 40 points this morning. So yeah, it's threatening the call side a little bit. But is the trade busted? No, it's just taking on some drawdown. You have $4 of wiggle room for drawdown. That's the most you could lose on the trade. So if you're down a couple $100, like there's going to be fluctuations in there. This is why I've spent so much time teaching the strategy where you have to embrace whatever risk it is. Because if you want to put in a stop loss, you're going to get stopped out in a 0-day environment. And it bothers me way more to get stopped out when the trade would have actually worked. Because if this is my line in the sand, and this is my line in the sand, and price does this and then closes here, or price does this and closes here, or price does this and closes here, or price does this all day, I don't want to get stopped out. You get stopped out here, you get stopped out here, you get stopped out here, and the price still cooperated and closed for profit. I want those closes for profit. So that's why it's about the risk up front. Yeah. Okay. All right. I'll be looking at some pinch point scanner setups today. I'm looking at the get sets. I mean, this is pretty interesting. Look at my pinch point scanner for a moment for Watchlist Wednesday. We have some trades in the get set. Tesla, Palantir, Russell, Snapchat, Hewlett Packard, Walmart. These are looking for more direction coming soon. Now, I want to see how long Tesla's been in this get set mode. How long has Palantir been in this get? I mean, I'll take a look at them. Obviously, I'd like to see them in go mode, but these are huge stocks with a lot of good premiums and a lot of good liquidity. I mean, Broadcom, Google, it's like you're getting some big names here and some pinches. JP Morgan had earnings this week. Cisco, Microsoft, Coca-Cola's low premium, but still ready to move. Uber, Delta Airlines. Yeah, okay. So I'm gonna do a little bit of a deep dive into pinch point because we've got some nice names in the get sets. Let's make sure if it's at least like 2, 3, 4 weeks of consolidation, maybe it's not quite ready for a go filter, but get set's pretty good on some of these big names. If I can get a get set on like SPY or QQQ or Dow or IWM, like IWM in the, it's starting to move. It's already at all-time highs today. So maybe that one's passed, but still there's some good names in there. And then the goes, these are just coil and pinch ready to rock. Okay. Take a look at that. VRT. Let me take a look. It's up 50%. I mean, we can take the profit right now if we want to, Rich. So I've got my take profit set at 382. It's trading for 379. See if we can get a fill on this one and close it. I'll go 80 cents. I mean, the good thing is we're way above that price. So we really shouldn't have to do anything on it. But if we want to take the profit, I'll go to the mid price. Maybe go down to 375 and just take the winner. See if this will fill. It's out 37 days. Let me look at the option chain. So 382. I mean, what's kind of nice about this one is we might even get, this was okay, so going out to November, the 155 by 160, there is about a 72 to 76% chance this thing will be fully in profit for a $5 credit. So again, I mean, time is our friend. If we're into that, second half of the trade here where we're past the kind of the theta decay, once we get to the halfway point, usually this is where our profit starts to line up faster. I say, just let price do its thing. Give it another couple of days. Maybe look at the implied volatility. It's up to 40. So could just be a little bit less liquid. You're seeing plenty of open interest though. There should be plenty of liquidity here to get us closed out. We're close to that profit target. I mean, if you wanted to try to, I mean, we got in the trade for a what? 255 debit. I mean, if I close it out for 375, 370, 365, like I could take the profit now and be happy. We set the take profit at 50%, which we're just under that. So let me see. If I went 374, I don't think we should take less than 370 on this trade. You can see the bid ask is pretty wide. 370, 371, 370. If it doesn't fill, I'm going right back up to 382. Not filling. Okay, that's fine. I'm going to go to 382. So if this doesn't fill by the broker automatically, and we are getting to within 10 to 15 days of our expiration, and we're still trading at 180 or 185, if it increases the probability of our profit, I might just remove the take profit and let this thing close at a full $5 credit. So we pay $255, remove the take profit, let it close out automatically at 5, and we make almost a 100% gain on the trade. So I'll keep an eye on it. But what was the setup? It was pinched. We took a trade. It's exploded to the upside. Now it's just a matter of letting time be our friend and get us our profit target. But appreciate you asking, man. That was good. I mean, it's nice to see that the stock is cooperating. And we still have about a 70 to 75% chance that it stays fully in profit for us. Okay. All right, Ken, this is for you. For anybody that's asking, what course do you teach every Monday? Well, obviously I teach daily profit every day of the week, but every trade Monday at 11:30 a.m. Eastern time is